Potential trade setup here on the Euro Yen 5/15 minute. As a result of the news that came out a few hours ago regarding Germany, Europe and England, and what we're putting in is a flag pattern. However, what I'd like to do is, I'm not going to take you through the full top-down analysis. I'm just going to take you through to the 60-minute time frame and just show you that we're now in trend continuation within this little area. And so if we zoom in and just look at what price has done, we rallied down, we retraced. Actually, sorry, it does need to be on the 15-minute. On the hourly, we don't have a 3-point move. On the 15-minute, we do, and this is where we can see the pattern. So here you can see we actually made a new structure low here, and then what we did is, this is our first violation, our first potential outside return, and this is our new structure high, confirming a rotation on the 15-minute time frame. Now, it's something I'm bearing in mind, and so when I look at this momentum candle here, which is as a result of the news, I'm going to be looking for reasons for me to buy this market up, and typically we see some form of consolidation before the breakout, and the breakout can go either way, but I know based on this setup and this type of pattern, I have a higher probability of it breaking to the upside than to the downside. And because I've now confirmed trend on the 15-minute, which is also what the trade is on, then I'm able to play for those extended targets as well. So one touch here, one touch here, one touch there. We can class this as a touch. That would make it a 2-touch flag. Problem I have is that we've not come down and tested the 618, and in this type of setup I do need that 618 to be tested. So while it is difficult, I have to sit on my hands and wait for that 618 to be tested. Of course, if we get the breakout here and then we see a retracement, well, that's absolutely fine, I can get involved. What I don't want to do is get involved too early and potentially have an inverse risk to reward or be stopped out and only get a 1-to-1 risk to reward. I want something better than that. So this is the market moving down, sideways, down. See how harmonic it is? We see it coming up, and I would expect us to come down. We may not get a full test here because this is a very deep retracement now, but certainly come down and test the 618 is what I'd like to see. Ideally down to here, hold, and then we get an indecision candle here with a wick or just a bullish candle, and that gives me an entry. So just something like this, giving me a very nice risk to reward, something like that, and then I will be playing for extended targets. So we'll see if this plays out and we'll come back to it. And we're back on the Euro Yen. I've just got involved with the trade because we have broken the trend line, and this to me then signals that the breakout is occurring, and since we know that this pattern has a high probability of breaking to the upside, I don't want to miss the trade just because we never came down and hit the 618. So plan A was obviously I'd like it to come down for the third touch. I did mention if that didn't happen, plan B will be if we get the breakout, I will then enter. The breakout was this candle. And so in terms of stops, well, my stops must be underneath here, and I need them far enough back to ensure that the market just doesn't turn around and come back again, spike down, and really importantly as well, look left from this point. This is the close of the candles. I am underneath that. The number of times I've been stopped out because of that simple rule not being underneath there. And I like to have a high win rate more than a great risk to reward. I like to see the winners. So this will be our risk. This will be our reward. So pretty much just giving us a 1-to-1 there. I'm going to make that green. We're playing for a retest of the highs. We're at the we're at 129.90, so another 10 pips to go to the psychological number, so that's absolutely fine. In terms of risk here, 31 pips, quite a big trade, and 29, slightly inverse risk to reward, but a higher possibility of the trade going on to win since we've had the breakout. My stop really is in an appropriate place here. I think I said as well we were also in trend on the 15 minute. Yeah, you can even look at this as a head and shoulders. This is typically what happens when you see the reversal. That's not right. Well, that should be there. Okay, so left shoulder here, head, right shoulder. Really importantly here, this right shoulder is higher than the left, and you can see here that the shoulder here, we did not violate this shoulder, so we have not made a new structure low here, we've held it, and we've made a new high above this high, so everything indicating here that we can go higher. That's another reason there I want to give it a bit more room to breathe, because I do believe we can go for extended targets. Now when looking at extended targets, I know I've not done the top-down analysis on this pair, but that's purely because I'm in quite a lot of trades as a result of the news. I typically see myself as a breakout trader, and it's very busy at the moment, so I don't have time to do that. So let me just remove the orders. Really, if we just see what we've done here, we've actually held that level. However, the higher level of structure is there. So we came down, retraced, new low, retraced, new low, double bottom. That's a reversal in itself. We came up, violated this level of structure, had a small retracement, went higher, came back, went higher, then we violated everything, and then we've put in a potential rotation. So there was no trend here, but then we've put in this reversal pattern. So let's just drop down to the 60-minute time frame, move these VS1 levels in, and yeah, so there's the momentum move. So we're looking for a retest here. Obviously, please remember, with this high is, come on, this high is above this and this, and so extended targets, I believe we can go all the way back up to retest the highs based on the setup here for the head and shoulders, and also for the breakout pattern that I'm in. Now on the breakout patterns, unless structure is really heavily giving me some signals that we can go significantly higher, I won't trade past the full fib extension. Now the fib extension though, I am taking from the top, not from the start of the pole, but from here, and you'll see that this 1618 lines up very nicely with the top of our structure level. Oh, would help if we brought the targets back on, and I've actually gone just underneath that 1618. I think that was based off the 60-minute candle body closes. Yep, there they are. So secondary targets, if I can get into C, they will be there. I'm going to have to drop down a time frame to draw it out correctly. Can't have it looking like that. It's bad luck. Make the trade lose. Okay, and we're going to do that yellow. And so 31 pips of risk, 29 pips of reward, and target 2's 115 pips. So a big extension here. It is achievable. I believe we have a greater chance of 50% than hitting it. That is why I'm going for it. And just remember that trading is all probabilities, and the probability for me based on the current setup, the head and shoulders, the expectancy of the breakout pattern, the fact that we've been putting in new highs as well. Doesn't mean we'll get them, but yeah, we've gone for them. We'll come back and see the outcome. And here we are back for the last part of the video, and we did get the reaction. We came up to this level, so 129.84s. First targets were 129.90, so 6 pips away, unfortunately. Not enough to move to break even, and the market has just come down and stopped me out for a loss of 31 pips.